Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States zone. The Fed kept the rate steady in the 4.25 to 4.5% range during its January 2025 meeting. The central bank paused its rate-cutting cycle after 3 consecutive reductions in 2024. Fed Chair Jerome Powell stated that the Fed is not in a hurry to lower interest rate and may wait to see further progress on inflation. The first GDP data for Q4 2024 will be released this week. The U.S. economy is expected to expand at an annualized rate of 2.6% in Q4 2024, down from 3.1% in Q3 2024. Post-election, the U.S. president reiterated his stance on boosting domestic fossil fuel production, which may lead to lower oil prices and support a lower rate environment. China zone. DeepSeek. A Chinese AI startup founded in 2023 has quickly gained global recognition, challenging OpenAI's GPT-4, Meta's Llama, and Google's Gemini at a fraction of the cost. The app has topped App Store charts, sparking discussions on China's AI potential and U.S. tech competition. DeepSeek is seen as a symbol of China's push for technological leadership and a major disruptor in the AI industry. Indonesia zone. M2 money supply in December grew by only 4.4% year-on-year, a decline from 6.5% year-on-year growth in November. Despite the downward trend, it still recorded positive year-on-year growth, indicating that consumption activity remains on a positive trajectory. Foreign direct investment data for Q4 will be released this week. In Q3, foreign direct investment recorded 18.55% year-on-year growth. Market view. The Jakarta Composite Index increased by 0.16% week-on-week, closing at 7,166.06. However, the JCI is expected to enter negative territory this week due to an extended 3-day holiday and a lack of significant catalyst both domestically and internationally. Foreign investors recorded a net sell of 916.44 billion Indonesian rupiah over the past week, bringing the year-to-date outflow to 3.60 trillion Indonesian rupiah. The 3 best performing sectors were infrastructure, technology, and consumer cyclicals, which increased by 2.27%, 1.81%, and 1.26% respectively on a weekly basis. On January 24, 2025, the yield on the 5-year benchmark government bond FR0104 increased to 6.76%. Meanwhile, the yield on the 10-year benchmark FR0103 decreased to 6.94%. Similarly, the yield on the 15-year benchmark FR0106 declined to 7.15%, while the yield on the 20-year benchmark FR0107 also fell to 7.16%. The yield on the 10-year Indon bond Indon 34 declined to 5.46%, while the 10-year U.S. Treasury yield flattened to 4.62%, compared to their levels on January 17, 2025, which were 5.50% and 4.63% respectively. Indonesia's risk premium, as reflected by the 5-year CDS, decreased to 73.76 basis points. Meanwhile, the rupiah strengthened by 1.29% week-on-week, closing at 16,173 Indonesian rupiah. As of January 23, 2025, foreign ownership in the government bond market was recorded at 874.73 trillion Indonesian rupiah, 14.35% of the total outstanding, an increase from its level on January 17, 2025, which stood at 870.99 trillion Indonesian rupiah, 14.34% of the total outstanding. The Fed is expected to cut interest rates twice, totaling 50 basis points in 2025, lowering the benchmark interest rate by a total of 100 basis points year-to-date. The U.S. economy remains on track for a soft landing, with growth projected at 2.5% year-on-year in 2024 and 2.1% year-on-year in 2025. Similarly, Bank Indonesia is expected to implement an expansionary monetary policy in 2025, which is anticipated to positively impact Indonesia's economic growth. The bond market is likely to respond positively initially, driven by improving macroeconomic condition, followed by strong performance in the JCI. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.